The Economic and Financial Crimes Commission is raising fresh concerns about Nigeria's rapidly expanding fintech and point-of-sales network. According to the agency, weak verification measures, poor oversight, and structural vulnerabilities are leaving the systems open to criminal exploitation. The report.
Speaking at a resumed investigative hearing of the House Ad Hoc Committee on Cryptocurrency and POS Operations, EFCC Cybercrime Section Supervisor Dean White said inadequate Know Your Customer compliance, unverified POS agents and compromised systems are enabling criminals to channel illicit funds through POS terminals.
I think there is need for CBN to play a stronger oversight function in terms of ensuring that the core banking application, the endpoint architecture and infrastructure within the financial ecosystem, including the fintechs, meet best practices to ensure the prosperity of not just end users, not just investors, but the economy as a whole.
White called for stronger monitoring of core banking applications and fintech infrastructure to better protect users and aid ongoing investigations. The national president of the Association of Digital Payment and POS Operators of Nigeria, Paul Okafor, revealed that fraud losses across digital channels have surged, jumping from 17.67 billion naira in 2023 to more than 52 billion naira in 2024. He said POS platforms now account for over a quarter of all reported fraud cases and warned that unregulated operators pose a national security risk.
So these databases are existing with Nigerian police and other security agencies. We are proposing, Mr. Chairman, that anybody who wants to come into this space must first of all get that clearance. And the clearance can be done in such a way that with using their phone or using their POS terminal, they can online apply for it. All that is just needed to be done is for a background check to be done using their BVN, their NIN, and other information they will provide, and then a feedback will be given to them.
But OPA's Chief Operating Officer, Dr. Adekunle, argued that banks, not fintech firms, are often the weak link in the financial system. He added that enhanced anti-fraud tools are reducing fintech's exposure to illicit transactions.
The trend in the industry has been that it has been the banks, unfortunately, that have been having system glitches in the last 3 years. If you check the statistics, you'll find that it's either this bank today or that bank tomorrow. The challenge that the fintechs had was that when those funds were then stolen from the banks, some of the fintechs were the conduits where the monies moved to, and they were moved out through POSs. And that's what led to the directive by the CBN about a year and a half ago that stopped fintechs from opening accounts until KYC issues were properly addressed.
Earlier, the chairman of the committee, Olufemi Bamishile, said regulatory gaps, offshore data storage, and unlicensed crypto services continue to threaten Nigeria's digital economy. He assured that the committee will propose new laws to strengthen oversight and safeguard consumers.
Another critical issue is the storage of customer data outside Nigeria's territorial jurisdiction. Several major fintech companies operating here keep the sensitive data in foreign servers, limiting the ability of Nigerian regulators and security agencies to conduct real-time audits, trace transactions, or enforce orders.
The committee is expected to submit its recommendations in the coming weeks.